So let's open it up for Q&A. I'm going to read some questions. I see that Jonathan and Jenny have their hands raised. I'm not sure if you guys still have questions or if they were answered through the course of the interview. Jonathan, do you want to ask whatever question you had sitting there?
Yeah, I got a bunch here, but you could pick whatever ones. They're all of interest to me. Put them in there. How you handled your LPs in the past when the deal went bad? What happened to them right after? Where are they now? Oh, do you have any properties with balloons coming due like these other investors there? A lot of people are selling off stuff because there's balloons coming due in the next year. And are you going to consolidate or what you're going to do? Those are good enough. The other two, those are big discussion points.
Yeah, I'll answer both those questions. So happy to say on the full cycle deals, I haven't had anything go bad. One or two of those deals didn't hit projections, and the other seven either did hit the projections or dramatically exceeded them. Obviously, working through some deals that were bought largely between 2020, 2022, I backed off, only did a few, thank God at that time. But then we've done the two in the 2 years since in a better buying climate here in 24, 25 that are doing very well. On those deals, though, we've refinanced a few of them to give ourselves the runway to get out to the other side here in this market. So we think we've bought ourselves the necessary time for the market to come back in a big way to where we're going to at least be able to return the investors their original capital and hopefully some on top as well. And we'll consider that a success in that climate, given that a lot of people have heard about deals that went the other way where investors did lose money. I'm happy to say that at this point, I still have never had an investor lose money invested with me. So in answer to your question, Jonathan, as far as bad deals, haven't really had any that have gone full cycle at this point. It's just been one or two that didn't quite perform at the projections. And then, but even through this, the challenges right now, I think it's being transparent. Somebody's got their mic open that's producing a little noise. I don't know if that's, yeah, it's better. Thanks, Jonathan. I think it's just being transparent and it's being real. It's talking about the challenges that are out there and making people aware, because a lot of passive investors, they're not living and breathing multifamily day to day like we are. They're not down in the trenches. So you have to let them know. But then I also think sometimes I like to think on any of our current deals, we made the best decisions with the information that we had at any given time. Are there one or two decisions in some of the deals I'm in that you look back on and maybe we should have sold then or we could have done? Sure. And I think it's important to fall on the sword for those things and just be transparent. Yeah, I wished we'd sold back here. We made a different decision because here was the information that we had at the time. And you just communicate that with your passive investors and you're not defensive. You're willing to fall on the sword. I hate sponsors that pass the buck or they want to blame somebody else, even if it is somebody else's fault, even if it is the management company's fault, or even if it is this, we're the sponsors, right? The performance it's on us. It's on us, regardless of who we team with to help execute that performance. At the end of the day, we need to be willing to fall on the sword. And I think if you're honest and transparent with people and you're willing to do that and you stay humble and you're not ego based, which a lot of people in this business get ego based, you got to stay humble. And the business has humbled us over the last few years, right? Maybe some people from the last cycle needed to be humbled. I think that's a good thing in the long run. Yeah, so it's just honest. It's being real. It's being transparent, not only about the good, but about the bad, the good, bad, and ugly, and just continuing to operate that way. Hopefully, I answered your question.
But just one specific thing, when you said you refinanced out of it, my thought would be you're refinancing with a much lower NOI, with a much lower cap rate because rents are down, values are down, costs are up. So did you have to do a capital call or what did you do?
Yeah, on one deal that we refied, we brought in a small pref piece and that helped us bridge that gap. On another deal, we set up a fund. We were able to do an HFC tax abatement on the one deal I did in Houston, which is the only deal I've done outside of DFW. Everything else I've done has been in DFW, and my partners on the deal were able to get a tax abatement where all of a sudden it was creating a tremendous amount of cash flow. So instead of doing an internal capital call, we were able to set up a fund which was going to be able to pay out immediately because we were going to have this $700,000 savings for now property taxes that we were going to be able to hit. And I'm sorry, that wasn't an HFC, that was a PFC. I said HFC, but I meant PFC, which is a little bit
So
different.
it was a kicker, right? It was a kicker that you had to redirect.
Yeah, you got to be, like I said, you're going to have challenges, right? And it's what are the options available to us? Okay, here we are. What are our realistic options at this time? And there are always options, is the good news, right? Usually, I'm going to speak for myself because maybe there's some other people out there that did run out of options. But I'm going to say, based on my experience, there are always options. And one way or another, there's always going to be somebody that can provide a solution to your problem. Now, you have to sit back as an operator and decide if that solution is one that you want to employ. But there are going to be people that can provide solutions to your problem. How are you going to be? And in some of those current deals, it's just been living to fight another day, right? It's been finding a way to have runway on these deals so that we all believe the market's going to come back. And my goal above and beyond all is like on some of those deals, some are going to do, I have complete confidence that they're going to get out to the other side. There's some gray areas. We're doing the best we can and we bought ourselves some runway. But my focus on those deals, even though myself and my partners are the one that have put in all the time and the blood, sweat, and tears, it's on those LPs. I just want to at least return that LP capital. And I don't want to have any investor in my deal lose money. So I'm thinking about them first and foremost and doing right by them. And that's my goal. Without diving too into the specifics, obviously that would be a deeper conversation, but hopefully that gives you some information. So it's been able to work through the challenges and continuing to do. The great news is on the operational side, dealing with those challenges are tough, but I'm glad we had the reset because I told you I backed off when everything went sky high in pricing in 21 and 15 factors had to go right. And it just seemed like, and everybody was paying absolute top dollar. There had to be a market reset, even though it's been a little bit challenging and painful for some, including myself in some ways on some of the current properties we own. It's created a shift and a reset here, which has created the opportunity that allowed us to buy the deals we bought in the last 2 years at an unbelievable basis that we've been able to perform on despite some of the remaining headwinds. And Logan said, moving into 26, some of those operational headwinds are going to lessen significantly or completely go away as we move into 27, 28. That's where the opportunity is here right now. So it's continuing to operate those deals that we currently own to the best of our ability, but then it's taking advantage of what's out there now on the buy side. And we think there's going to be the grand slam deals of this cycle are going to be bought right now and in the next year or two.
It's amazing because I think that the cycle is still going down, at least in Miami, Broward, Palm Beach, it's falling. And the fact that's not happening in your market, I am so interested to understand what exactly is going on that yours has ended and then bouncing back up.
Yeah, we're not forecasting rent growth for at least a year when we're underwriting these deals. So we're being very conservative. Now, sometimes we're looking at a property that's under market, right? We might be looking at a comp and then we've got surrounding properties that are already achieving something. So we can certainly catch up to what the properties around us are doing if they're currently achieving in this climate. But as far as forecasting, market growth organically, we're not even looking at that until like years 2 or 3. So we're being pretty conservative in that regard, and diving too deep into underwriting is probably not the focus of this call. Gabe and I would love to have a call with you, Jonathan, and if you're interested, and then it's very selectively deciding which submarkets that we're going to buy in, because different pockets of DFW and even different pockets within a specific city or submarket can be different from each other. And that's where being boots on the ground operators, being local to the market that we're buying, investing in really comes in, so that you're able to accurately forecast. You might have one area that's got negative rent growth, but then there's another pocket that doesn't and has some positive rent growth. And that's also being experienced as an operator, but it's having relationships, as I said, with the third party management companies, because I believe in really bringing them in very early in the process, because they have thousands and thousands of units and they're operating properties on a day-to-day basis. So who better to know about a specific pocket and what we can do on a specific property? So they do their own independent analysis. We run our own independent analysis, and then we bring them together without talking to each other. We make sure that, and then sometimes we get we'll get something from third party management companies and we see that they're forecasting this a little bit differently. Okay, we're going to lean on and trust on what they're saying because they're in the trenches on a daily basis. It's up to the minute information, Jonathan, and it's like what's actually happening in the market in certain submarkets. So we're staying right on top of that so we can accurately forecast in our projections and underwriting.
Awesome. Very good. Great questions, Jonathan. I want to make sure we have time to get to the other two. Jenny, I know you had a question. Why don't you go ahead?
Hi.
Hi, Jenny.
So much, Aaron, for a great, yes. Thank you so much for a great presentation. I really enjoyed it. Thanks so much for sharing. Can you see me?
I can see you. So is it
Hello?
Jenny or is it Jenya?
It's Jenya.
I thought it was Jenya. My grandparents used to have a longtime friend named Jenya, and it was spelled the same. So I thought that was it. Yes, great. You're freezing though.
Yeah, it's a
Okay.
Ukrainian name.
Yes. Very good.
All right. So I had a question about the partnerships. You brought up Craft Capital and Gabe, obviously, many times. Is this more of a special Craft Capital? Is it more of your strategic capital partner, or you are on the asset management or investor relations or acquisition side, or what kind of partnership is it? And you and Gabe as well.
Yeah, we're completely aligned and fully aligned as partners. We've just kept our brand separate because I've spent 15 years building up my name, Aaron Katz. No disrespect to Gabe, but I just didn't want to bury Aaron Katz under the Craft Capital umbrella. And he spent a lot of time building up the Craft Capital name. In terms of our partnership in name, it's a partnership between Aaron Katz Apartment Investing, because that's the brand I've built, and Craft Capital Investments, which was Gabe and a few other gentlemen and an entire support team over there. But we're fully aligned in terms of everything that we're doing, in terms of asset management, in terms of looking at and considering new acquisitions. Our investor relations are separate in that I'm communicating with my community and they're communicating and building their communities. But we're having conversations about how to build our communities together. And obviously, then we've combined our brands in some things, as I mentioned, in terms of live events and virtual events that we are doing. So hopefully that answers your question.
Okay, I got it. So
It's a
it's a
full
fully
line
aligned.
partnership.
Yeah, yeah. I was just not sure. Thank you so much.
As I said, when I started, I did all of my first 5 deals. I was the only GP in the deal, which looking back sounds crazy. Why would I want to do that with all the work? But I did it and I did it successfully. Obviously, the ability to partner with people and leverage people's strengths, and maybe those are complementary to some of mine, plus just divvying up all the work, right? Because it's a lot of work. So I started partnering with people in 2017, and those were largely the one off partnerships in terms of, hey, let's do a deal together and maybe we'll do another. When I decided to get super active again, when I saw that the market had shifted and the opportunity was on the table and started having those conversations in 24, and then we partnered together on a deal, the one in 24. And my role in that one was a little different. I was more of a consultant with my experience and I raised some capital. And Gabe and his team operated and they ran asset management on that deal. That was in February of 24. We acquired that deal. So then I was partnering with them, talking with them, and seeing how they operated that deal all the way through 24. And I realized I need to build traction and find a partner that I can grow with. I don't want to do another one or two off partnership in this cycle. I want to find a partner that I can do a lot of deals with and that we can build traction and momentum and systems and processes and alignment. And because I saw teams that partnered like that gaining a lot of traction. And I thought it would serve me and my investors better than just trying to reduplicate the process with each deal with new partners. So that's what we built here. This is not we're doing this deal and we'll see if we do another one. That's what we did road testing it last year. So it was watching them operate that first deal when I was largely just a consultant or a capital raiser. And then late in 24, early in 25, okay, let's align everything and let's road test it and see how it goes. Maybe as we start working together in a co-lead capacity, maybe it won't work. And we'll realize that along the way. There'll be the opportunity to walk away if it doesn't. But if anything, we realized there was more synergy and we came into more alignment as we worked through the year chasing deals. Then we did the deal and now we're working together in all capacities. So this is a partnership that has traction and we're going to continue to partner together and do projects together moving through this next real estate cycle.
Thank you for clarifying. No, it totally makes sense. And you mentioned, so you both are co-leads on everything, acquisitions, asset management, investor relations, or is somebody handling more of one area? The reason I'm asking, I'm in a
like
new partnership, right? Fully aligned at this point. We're still finalizing. Go ahead.
No, I'm listening to you.
I think my frame was
A
freezing
little
again.
bit.
Yes. So is it more of a one of you is handling more of a acquisitions and asset management, and the other one is more of a lead on a capital raising, or is it everybody is doing both everything?
Pretty much everything except investor relations. And then for some of the down in the details, laborious work, we have some team members at Craft Capital that are tackling some of that stuff. We're all involved in asset management. Like we said, we run investor relations separately with our different communities. But Gabe and I are meeting and talking all the time. We probably talk to each other more than we talk to our wives, and we're fully aligned in that regard in terms of what we're doing. And then also not just the deals, right? And operating what we have and then looking for new opportunities, but also bringing our brands together for the live events, the virtual events that we're doing every other month. It's been a decision to completely bring our brands together. And some of that maybe was planned, Jenya. Here's what the way we're going to do it. And then some of it's just developed organically as we've worked together to where I'm not going to say it's easy in the sense that we don't challenge each other, because we do. And when I told Gabe about potentially partnering in a co-lead capacity, it's like, we got to be afraid never to say something that might be stepping on the other's toes. It requires complete honesty. Maybe sometimes it's saying something that is not going to be received well, but we give each other the freedom to do that. And in doing so, we're working hard and we're doing a lot of work. But I like to tell Gabe, and I'll tell other people, this is fun. I'm having the most fun right now that I've had in this business for a while. And maybe it's because we've done a couple deals together, and it's nice to have deals that are performing and doing well versus some of the challenging deals from 2020 to 22. And obviously that's been great, but it's also just this partnership and working together. It's fun. When we have our face-to-face meetings and get together, there's nothing I enjoy more than just collaborating on achieving big things that we know are going to help us build our legacy, build our wealth, for our families, but also for all of our investors and then people that partner alongside of us in the fund model. I've done it before, so I did it in the last cycle, and I know how good it feels, and I'm looking forward to doing it again in this cycle, but this time doing it with Gabe and his team.
Thank you so much. I really appreciate you, Aaron, going in depth. It's been very helpful.
Thank you, Jenya.
Awesome. Very good. Great questions. Hillary, I know you have a question. I do want to get in at least one breakout session for everybody. So if you want to email Gabe or Aaron, you guys maybe schedule a call or something like that. And we ran a little bit over today. So we are going to do a quick breakout session.
I have a question. Can I use the bathroom? No, I'm just kidding. That was not my question. I'm joking, but a little comic levity there. But I will have to at some time. Maybe I'll disappear for a minute when we get in the breakout session. But
yeah, no worries.
I'm glad we're going here and spending all this time, because this is great. There's nothing more I'd rather be doing with my time.
Absolutely. And I appreciate you sticking around so long. So before we jump into our breakout sessions, we have to do our group picture. So everyone turn on your cameras. Let me see your beautiful faces. Everyone turn on your cameras. We're going to do our group photo. See your wonderful, pretty pearly whites. Let me move the spotlight for us. Turn on your cameras. Turn on your cameras. Say hello. I know we're getting to the end of the day, but I want to see everyone's wonderful faces. All right, Aaron, I think you know the drill. We flex around here for our group picture. I have a hoodie on, so you can't see my huge guns, but yeah, there we go. Oh yeah, pull down a sleeve, Aaron. Let them see. All right, everyone, turn your camera. Flex for us. Ready? 3, 2, 1. Fantastic. Awesome. You guys all look so amazing.